Amazon stock is trading at $229. It's up 34% this year, and investors are asking the same question. Can this rally keep going, or is it about to collapse? Well, Amazon trades at 34 times forward earnings, more expensive than the group's average, but nowhere near Nvidia's 44 times. So it's not cheap, but not frothy either. And this stock is both dangerous and exciting. In Q2, Amazon pulled in $18 billion in profit and $167 billion in revenue for the quarter. And that's a huge jump from last year. And it's coming from three engines that most investors don't fully understand yet. AI-powered AWS, ad sales that are going crazy, and a grocery expansion that could crush the likes of Walmart and Kroger. But here's the kicker. Everyone is watching the obvious stuff, right? AI, AWS, and e-commerce. What I'm watching is something else. And if it works, it's $1 trillion opportunity hiding in plain sight. So is Amazon really a buy at these levels, or will regulation, razor-thin grocery margins, and big tech pressure finally crack it? I'm Rick Orford. I've been trading since 1999, and I'm not a financial advisor, which is a good thing because I'm not here to sell you hype. I'm here to break down the numbers that most people miss so you can invest with more confidence. All right, let's get into it. Amazon is a global giant in e-commerce and cloud computing, famously founded by billionaire Jeff Bezos in Seattle, Washington. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. It's absolutely amazing to me that this company grew from just a little online bookstore into a digital marketplace of practically everything. Today, they offer millions of products across nearly every category imaginable. Now, they're the backbone of modern retail and are in a position to influence how consumers shop online. Their main business is still e-commerce, as their platform reaches customers from Europe to Asia and the Americas. Amazon Prime serves as a loyalty program and ecosystem builder by offering customers a combination of free shipping, content streaming, and other exclusive perks, thereby encouraging them to spend more and spend more time with the brand. Outside of retail, they have Amazon Web Services, or AWS, which provides cloud infrastructure and services to a wide range of businesses, from startups to Fortune 500s. AWS alone generates billions for Amazon and cements its role as a technology company as much as a retailer. What makes Amazon unique is their emphasis on innovation and scale. They dip their toes into AI, advertising, logistics, grocery, healthcare, and even satellite internet. Amazon is cultivating an environment that extends way past the online bookstore, and they're still going. Their logistics network has grown so much that it rivals traditional giants like FedEx and UPS. So with all that out of the way, let's see how Amazon stock has been doing recently, and if you want to follow along, just scan this QR code. Amazon stock is currently trading around $229, near the higher end of its one-year trading range. Speaking of which, the stock is up 34% over the last year. And here's where it gets interesting. Compared to the rest of the Magnificent Seven, Amazon's been trading at the lower end of the group, but above Microsoft and Apple. For reference, Amazon is 5th in terms of market cap, right behind Google. Amazon's also trading at 34 times its forward earnings, which is a touch above the average. So it's trading a little at a premium, but not as much as Nvidia's 44x. So you could say Amazon's expensive, but not so much compared to the frothiest names. But valuation metrics alone, well, they don't tell the whole story. The financials do. For Q2 2025, Amazon reported $167 $148.7 billion in revenue, growing from $147.9 billion a year ago. And that's a pretty big year-over-year increase in profit. Not just hype, that's hard cash growth. Amazon's balance sheet is looking just as resilient, reflecting a 0.15 debt to equity ratio and a 1.02 current ratio. I mean, I'm not really surprised. This is not some struggling startup. This is a giant we're talking about. And in plain English, Amazon's business model is firing on all cylinders. So with all that out of the way, what's actually fueling this beast? Well, to answer that, we can talk about the catalysts, because they've got a lot. First, there's AWS. Yes, everyone talks about AWS, and for good reason. Amazon's web service revenue comes from selling cloud servers to AI-driven tools and partnerships with companies like Anthropic. In terms of AI, Amazon is embedding artificial intelligence across retail, advertising, and infrastructure with over 1,000 AI initiatives in development. AI-powered targeting is boosting ad sales at a rapid pace, turning Amazon into one of the largest players in digital advertising. This combination of targeted ads and servicing customer needs allows the company to enjoy enhanced monetization and customer loyalty. AWS's role as the backbone of their digital economy gives Amazon a high-margin growth machine that funds scale and wide expansion, but also allows themselves to stay in the AI space. Amazon is also taking large strides towards becoming a grocer. Same-day delivery for fresh and perishable goods is already available in over 1,000 cities, and the company plans to double that by the end of this year alone. For Prime members, these deliveries are free on orders above $25. And that's sticky behavior, because once you stop going to the store, you don't go back. While grocery margins are infamously razor thin, Amazon's infinite web of logistics infrastructure positioned themselves to snag some big market share from the traditional big box grocers that dominate the market. This also allows them to turn their grocery segment into another new revenue stream that inspires more customers to upgrade to Prime and keep shopping with them. Another catalyst is their space-based satellite broadband network called Project Kuiper. I don't know if I spelled it right or pronounced it right, but Amazon wants to deploy thousands of satellites to deliver broadband connectivity around the globe and ultimately compete with companies like Starlink. This technology is integrated into AWS and their in-house robotics and logistic ecosystem. For the consumer, this means faster and more reliable connectivity, as well as smarter and cheaper deliveries. For Amazon, this means a $1 trillion long-term opportunity. And it presents Amazon as a company that can thrive wherever it decides to plant itself on multiple fronts simultaneously. And that's why analysts can't stop upgrading their targets. But hold on, right? Every story has a flip side. So let's talk about the risks and red flags with Amazon. Lawmakers in the United States and in Europe have had some regulatory pressure on Amazon's dominance in e-commerce and cloud computing. The UK's Competition and Markets Authority have also flagged AWS because it's a dominant player in cloud computing and raises concerns about potential anti-competitive behavior. Antitrust cases accuse the company of favoring its own products within its own marketplace platform, thereby limiting fair competition for third-party sellers. If regulators force Amazon to change its business practices, it could change their profit margins and weaken its advantage in the marketplace. Another risk to Amazon is their expansion into groceries. While it does increase Amazon's reach, grocery, as I said, is a game of razor-thin margins. Because of their entry into the grocery market, key players like Walmart and DoorDash, they've already dropped their prices. And some analysts are wondering if this can be profitable for Amazon. Still, Amazon's unmatched scale and diversified business lines give it the strength to weather the storm. Now, with all that said, I think Amazon is a stock that greatly rewards patience. The company is trading pretty close to its all-time high, and that reflects strong optimism with the growth of AWS and their targeted push into AI, advertising, and grocery. The valuation is definitely not cheap, but Amazon has always commanded a premium price because of how skilled they are at scaling new businesses and getting them to profit quickly. In other words, Amazon's pricey, but they've earned it. And for long-term investors, Amazon to me looks like one of the safest ways to ride the global artificial intelligence shift. But what do you think? Can Amazon keep delivering growth through all these different projects, or will they crumble under the weight of regulation and competition? Let me know what you think in the comments below. And while you're there, if you found this video helpful, do like and subscribe so others will find it as well. Well, folks, that's it for me today. I wanted to thank you so much for watching, and I will see you next time.